Hello, 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 hello. Mic test, mic test. Hello, 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 hello. Mic test, mic test. Hello, guys, and welcome to our 137th edition of the Trading Opportunities webinar. And this is Neerav coming to you live today at a little bit of delayed time than usual. Generally, we conduct the webinars at 2 p.m. GMT. Today, we are late or have rescheduled to 4:30. So, anyways, this is the weekly market update series or global market coverage series, which we call the Trading Opportunities webinar. In the past 135 webinars, which were all conducted live on YouTube and LinkedIn, we have captured a total of 341 trades, and we will see what of the last discussion we were able to capture, what is the progress regarding the counts and regarding the trades. Before moving any further, a little bit more about my work. I'm the admin and owner of 50eyes.com website as well as the 50 Eyes Market Analysis YouTube channel. And apart from this weekly series, you can also find more information or more of my educational content in the form of video course here, Elliott Wave video course, which has 1600 plus students, and the book Think with the Markets, which is for intermediate to advanced traders. It's available on Kindle, right? Other than that, here is the spectacular track record which we have maintained for 6 plus years. Since 2016, you can see we have discussed a lot of markets in publicly as well as publicly via YouTube webinars as well as video uploads, and we have documented all these with the dates, the market discussion, and the link for the videos over here on this page, right? And as you can see, after all this compilation, we have a track record of 80% plus for 6 years consecutively, which is higher than all industry standards, right? So with that introduction, I'll now head over to our current session. The way we proceed is the same with every webinar, but just to give you a quick outlook, we'll start with the chart of euro, followed by crude oil, gold, SPX, and in the end Nifty. I'm not covering BTC anymore on a regular basis. If I do feel like there is something worth mentioning, I'll check it, right? And before discussing the current market charts, we'll also have a look at what was being said in the last webinar. So for instance, in this case, we are looking at the euro chart. So starting off, let's have a look at what was being discussed on the chart of euro in our last webinar. And there were basically two views here, which I recall. And one of the views was that this market is heading lower for the wave C lower, as you can see here. Good evening to you, Ativat. And the second view was, let's just quickly, actually, I think this is me in the last webinar, looking at the last to last webinar. Perhaps possible. No, that's fine. Okay. So one view was that we are heading lower for the wave C. And the second view was that the ABC correction is perhaps complete. Actually, not. The A down is complete and the B is still continuing within the flat continuation, possibly expanded or running. Right. So whatever the case may be, that was the second hypothesis H2, and the more likely count was H1, as you can see over here. And the H1 count is seemingly what's playing out. Before moving over to the live webinar, that's what I just wanted to point out. I mean, the live chart. So here is the actual live chart. So what we do have here is the market propagating most likely with the second bias. So comparing it with the chart in our last webinar's discussion, the price at that point in time was around 1.093, roughly speaking, right? And 1 second. Yeah, the price was 1.093. The main idea was the market can go lower. The secondary idea was less likely was to look for longs above 1.117, basically a breakout long kind of a trade, right? And in this case, as I mentioned, the market has gone lower. So I just wanted to check the price. And here is the market. Let me just push the markings. So here was 1.093 something, roughly speaking, over here. And since our discussion, the market has gone lower to make a low around 1.081. And still, both possibilities are existent. One suggesting that this is dot A, dot B, and dot C, and this market can head higher from here. Second is suggesting that dot A is complete here, dot B is complete here, perhaps, and dot C perhaps complete here, marking the completion of the B. So this A is complete, B is complete, and C is going to go lower, right? So long story short, we are looking at a flat correction here. This is the dot A of the flat, dot B, and dot C. If the flat is complete already, we can see a leg lower, because in the bigger picture, this is what you will call a kind of a zigzag. It can, I think, also be taken as a flat. Anyways, so my point is, I'm just going to focus on this part, because other than that is kind of not very relevant. It is, but we have already discussed or touched upon it. So long story short is, if the leg lower is complete, that is like higher is complete, I mean that is the dot C is here, then we are going to see a leg lower from here. And as I discussed, the second possibility is that this B is still in play, and that makes the C to be something which is not yet done for, right? So that's about it for our quick look on euro. Now, long story short, I'll just conclude is I don't have any trade on it right now, and the simple setup is still the same. We still look for breakout longs above 1.17, let's say. Yes. So it's still the same setup as the last time for the upside, and as for the downside, I just suggested we don't have any clarity if it's going to take a deep dive or it's already done for the time being. So we'll leave it at that. We are not going to discuss it too much. Keep it on the sidelines for now. Perhaps it will give a trade, perhaps not. Well, however, please keep your questions in English, and we'll discuss gold after crude oil. So just wait a while. And grand rising to you, Luis. As I just mentioned, just wait for the gold analysis, and please use something which has a real name. What do you want me to pronounce with that? Anyways, that's about it for euro. We leave it for the time being. It's not the most clear chart, and head over to crude oil. And let's very quickly run down on the last webinar and see what was being discussed on the chart of crude oil. So here is the recording from the last webinar. What we can see here is a zigzag correction is being discussed. I think we were at the resistance level. This was the resistance level, but let's just check by playing the webinar if it was mentioned specifically in the webinar or not. I remember it was a level I have posted in my Slack group. Yes, there it is. So as you can see, this white box here marked the upside resistance level. And the expectation was that this market is performing a zigzag kind of correction. That is, one leg was remaining from this resistance, guys. Right. So that is what was being expected on crude oil. Stop spamming the comment section, will you? I will look at it, as I just mentioned 3 times now. Now, heading over to the chart of crude oil, here's the live chart. Here is that resistance level which we saw, right? And you can see the market has gone lower pretty nicely. Just for the sake of context, we were looking at the price when the market was at 75.811, and now the market has gone lower to 70 point something something. So that's move roughly about 9%, which is quite big for an instrument like crude oil, right? And this was obviously all discussed live in front of you guys, as you saw in the recording. If you were there, you were with me in the live webinar, was able to catch at least the view and if the trade, definitely let me know in the live chat or later in the comments. That is definitely good to boost the morale of new viewers, right? One second. And so, as I was saying, we were able to capture this whole move or discuss this whole move. Now, the thing is, our downside target was within this white box range. The downside level was at 71.69, let's say. Once again, 71.7172, something roughly speaking here. And as you can see, the market has gone lower and is still sustaining below the said level, right? So that basically suggests that some bearish outlook is possible on this counter. So what I do mean is, previously our view was that from this point of reference around the price level of 65.68, we had a series of one up, two down, one up, two down, basically a nested formation, right? That's what we were expecting. But this leg down suggests that it is also possible that this market is not bullish. Rather, this was just an intermediate corrective leg up and it will now take out the downside levels. So basically, go lower and take out the recent low of the price level of 66, right? So that possibility exists, and the upside possibility, which we have already been discussing, is the nested impulse formation was never relegated. So now we have two views. Now, as such, at this point in time, what I can say here is that I'll be interested in longs if this market goes up and sustains above this green channels trend line, right? So if I were to draw it again, so if the market sustains above here, then we will look for longs, right? And that's why you can see I have placed an alert above the trend line. If it does not do that, then itself it's a sign of bearishness, and we will avoid bullish opportunities or bullish trades for the time being, unless they are very short term and intraday scalp kind of trades. Then that's another story. So that being said, this is our view on crude oil. Wait and watch. Upside setup we have discussed. Downside is not really a setup, and sorry, upside also is not a setup. Upside is just analytical view. Downside we do have a setup, but it's kind of pointless. It's a break below 66, which will confirm for the downside. And even if I'm serious about taking some shorts, I will be only interested below 67.7, right? So that is also still far away from the current level and may give us bad risk to reward trades. So crude oil also is the kind of short term kind of market here, and not the best of all the markets which we discuss generally. And that being said, let's now head over to the long awaited chart of gold, which literally everybody is asking about. And let's have a very quick look at the last webinar's recording. So here we are on the last webinar recording for gold, and let's see what was being said over here. I think let's just play it and see somewhere in the middle what was our analysis. Yeah. So gold analysis was that we were looking for a zigzag correction, and the idea was to look for longs about 2666. That is what I can see from this analysis. If I fast forward, pretty much, yeah. So there was a second less likely scenario, which was suggesting continuation as a possible double zigzag or a complex correction. But that was less likely, as you can see. It was only pointed out for a sec there. And then I'm just suggesting some short-term setups. Shorting possibility only below 2600. So that was the case. So basically, long story short, we were looking for long trades above 2666. And as everybody knows on earth, just kidding, as everybody knows who is following the chart of gold, we have taken out that level. And let's head over to the chart of gold here now. And this was literally the low, the one we pointed in the last webinar, which was connected on 11th of this month. This was the low, and 2666, almost as if the market liked what I said. It took resistance at 2666, gave a pullback, and then broke through it. And if you go back to the recording, you can see I was pointing out to a setup where we see a pullback at the level, market going lower, and then once that recent high is broken, then we enter the trade, right? So that is literally what happened. Good for all those who guys followed the analysis, and definitely let me know in the live chat if you did. I think there are a few comments which I have missed. Hey, is Conrad, one of our regular viewers, and he is also trading the things. So that's good to know. Great analysis of gold, booked a lot of profits per your analysis on the previous session. Went bullish at 2602. My entries 0205. Booked profit at 8090 2700. Thanks. You're very welcome, Conrad, and thank you very much for letting our viewers know. Keep in mind, guys, this is all public analysis, free of cost, all in front of you guys live. And I would highly appreciate if you guys were to share this content with your friends and colleagues so that we can have more of a following here, and we can reach more of the right audience who appreciates our work and time. Right. That being said, by the way, how is that possible? We have so many views, but only Conrad is the one who booked. Okay, there's another comment from Ativet. He also booked at 2700. That's really nice. All right. So now, before heading over to this analysis, by the way, guys, thank you. Okay, it's Von Dalen. Sorry, it's not Ativet. So Dalen is Ativet. Anyway, so before heading over, I just wanted to show you our entries and exit, my entry and exit on gold, because I was also trading it. Here is in our private Slack group. Let's see. Edit swing longs price 2668. So this analysis is literally what we discussed in the public webinar. Updated incoming 2700. Second target was 2708. And it surpassed both of them. Target surpassed, and I booked between 27 and 2708, I think, at 2704. Look at this. So this was literally as per our analysis. Of course, point by point updates were posted in our private Slack group. And if you want to get these updates live, then you are more than welcome to become a part of it. Anyways, that was it for our past analysis. Let's look at the gold, what's really happening here. Now, the thing is, here we have a possibility of correction completing here, which I've taken as a 4. And I do not think the fifth is complete at all. This looks like the one of the fifth, let's say dot 1 and then a dot 2. So we are currently looking at possibly dot 3, and then there will be a dot 4, which will be then followed by a dot 5th. Right? That is one possibility. And second possibility is that literally at this level, around this level, let's say 2720, we also have a marked resistance level incoming. So that is suggesting that instead of the market going up, down, and up like here, let's call this as H1. There's a secondary possibility that this market may just go lower from this level 2720, give a correction, touch these levels, or basically visit this price range again, somewhere within this middle of this or somewhere near it, between 2685 to, let's say, 2630. So somewhere within this range, it is possible H2 is suggesting that the market may go and then take off. So now the idea becomes that we are near a marked resistance level. Either the market will give a possible pullback within this range and then take off, or it will just go up, pull back, and then go up. That is the reason I booked the profits. And all this detailed analysis, as you saw, was already posted in our private Slack group. Now, the moral of the story here becomes that if I want to enter new longs, I'll wait for this supposed pullback. If it does not do that, then I'll look to enter above, let's say, roughly above 27, 24, 25, roughly speaking, something above 27, 20. I'll look for re-entry. That's basically the whole condensed story on gold. And I have mentioned in one of our many of our past webinars, and good afternoon to you, Raghu. So what I have mentioned in our past webinars is that gold is in a super bull wave here. So at this point, it is possible that it gives exceptional up move, right? Exceptional in the sense surpasses all expectations of targets. For instance, I think we have our long-term targets on gold at this one is coming on 2900. But my point is that if this thing is really in a strong bull move, then even 2900 may look like a childish target and it may just go even above it. So we are very interested in following gold. And if you may have noticed, ever since we started this series of webinars, gold has given us exceptional trades. We were able to catch not only these upswings, but the minor pullbacks. And then the exact turning points have been noted multiple times in the public webinars, and obviously in the private webinars it's a different thing. Don't want to talk about it because I can't show you the records here. We don't have the time for all that. But long story short, gold, watch out for it, this discussion, and obviously analyze yourselves and see what's going on before taking any trades. And that's it for our take on gold. Before heading over to our chart of S&P's 500 and the Nifty, I'll again take a moment here and request you guys that our participation in these live webinars and the recordings afterwards is exceptionally low compared to what we expect or what was in the past ones. So here I will request that you guys kindly share this webinar once it's complete with your friends and colleagues. If you don't have people who are trading in your circle, then kindly share it on the social media profiles like Twitter or Facebook or whatever you are using with the relevant hashtags, so that we can reach the right audience and our content gets as much appreciation as possible for the time invested. And with that being said, let's now head over to our chart of S&P's 500 from the last webinar. Here we are. Let's see what is discussed on this chart before moving to our live chart. So here is the chart, and this is the discussion. We are expecting the wave 2 to continue in a sideways range, or the second possibility is that the 2 is already complete here and then it will just straight off shoot up. Price is 5783. Let's see if anything else is said. Let me play the thing. So long above 5806 is the analysis or the conclusion of this analysis, I should say. And let's see if something else is said. Pretty much the same. So swing perspective, we are looking for longs, and entry was to be looked above 5806, and shorts only below 5683. I guess that's about it. This concludes our last discussion. Now let's head over to the live chart and see what has happened. Once again, price was 5784 on 11th, and here's the live chart of S&P 500. Price was 5784 somewhere here, and the entry level was 5806 plus. So 5806 has already crossed, as you can see, and the market has already headed to the upside. So The analysis literally worked out. That brings our tally of analysis which worked in the last webinar to a total of 3. Crude oil short setup, gold long which hit the target, and S&P longs again. So everything, all of these 3 things which we have discussed in the last webinar have worked literally as it is. Now what is the take right now? I am holding a long on this counter of S&P's 500, and the idea is the same which we discussed. We are still expecting this market to head higher, and I am assuming that this market is heading higher with this as your point of reference, and we are looking at it as a 1, as a 2, and a nested formation dot 1. And now here's the thing, we don't know if this is the dot 2 or it will go here and then give a up move. Basically literally the same theory is literally the same as we discussed in the last webinar. Some other counts are also possible, like we can take the whole thing as an actual impulse rather than nested impulse, but more or less the outcome remains the same. We are still looking for an up leg from the current price level. Let's get something more specific here. So here, actually, we don't have the confirmation of the 2 complete. So that is what I wanted to discuss. So here is a possibility that the dot 2 is here complete, but I'm not very optimistic about this leg down. It does not look exceptionally clear to me, and which brings to light the possibility that this too is continuing, possibly as a running structure. Quite common in bullish moves to go above the break, get below it a little bit so as to trigger the stop loss of the people who entered breakout longs and had a very tight stop and then take off. So be aware of that. It can go a little bit up, perhaps till let's see, I already have an alert 5896. So let's just say 5906, roughly speaking. It can go to 5906 before giving a dive, and then once this dive happens, and then it can go up again. This is not a precise level we can only predict when this internal structure is complete. I will look at the internal count. It does look like a complex WXY here, so I will not comment right away. You can draw some channels and get some targets that way. All of that I'll cover in the private Slack group. Right. So S&P, long story short, swing perspective, we are looking for longs. Be aware of this pullback which can happen. And on the downside, if the market goes below 5817, then that means something is wrong with our analysis, and perhaps it's not going to go up as we expected. So technical stop 5817 for now. Idea swing bullish, right? And other points which we want to discuss, we have discussed. That's about it for our S&P's quick analysis. Again, a reminder, if you guys are liking the content, do not forget to hit the like button and share it with the relevant audience. Now heading over to our next chart, Nifty. Let's have a last chart, Nifty. Actually, let's have a look. So this is interesting because last time when we did this chart on 11th, our take was that this market is an A down, B up, and C down correction. And long story short, we were expecting one leg lower for the wave C, which will take this market lower, obviously, as per this arrow, right? For the B up, we had marked the resistance level between 25500 and 25690. Right now, with that in mind, let's now check the actual live chart and see what has happened. So the market did go lower, not necessarily in the fashion which we expected. We were expecting something like this, right? That was the hypothesis I put forward in front of you guys. But keep in mind, guys, what I put forward in front of you is a simplistic view of the markets. Things don't always progress point to point as we discussed, and that I certainly make abundantly clear. Right, that's the literally the whole point of my book, Think with the Markets. So anyways, long story short, we were expecting downside move, and we did get a downside move, although here is a possibility that this is the low. If the market is bullish, it can take off from here because it has done the bare minimum requirement. It has gone below the low of wave A, below 24692. This low has been taken out. That is the only requirement in an ABC zigzag correction, that the C wave takes out the low of wave A. already done and dusted, right? So that means if the market wants to, it can take off from here. And the second possibility is, which I think may be the case, is that this B is becoming complex, and it can transform into multiple patterns. But long story short is, it can propagate within this boxed range anywhere above. Generally, it does not go above it, but anywhere within it is quite highly probable, and then head lower for C. So long story short is, as long as the market is within this boxed range, which is precisely between 25215 to what is this level of 24, let's just call it the low, 24570 517, sorry, or for 70, let's see, 24571. So within this range, this market can propagate before taking another dive lower. So that brings the setup very clearly to, simply speaking, if the market sustains above 25215, then we can look for longs. Below 24571, we look for shorts, which is basically this level. Right. So long story short, it is more or less a wait and watch market. For upside, we have a little bit of conviction above 25215, but keep in mind, it's not a trade setup above 25215. It's just a possibility that the upside trades may be taken. So we'll look at it when we reach that point in time, or price in time, whatever you like to say. And for the downside, we do have sort of a setup below 24571. I personally will be looking for shorting opportunities. May or may not be in the index itself, maybe in the related stocks, because I am covering all the related markets in my own trading as well in Slack. Right. So with that being said, we have now discussed all the markets which we generally discuss in these webinars. And those of you who stayed with me till the end, thank you very much. And of course, lastly, again, do not forget to share the content with everyone in your trading circle as well as your social media profiles. Hit the like button, and of course, I would like to see you guys in the next one. Until then, take care, guys, and that's it. See you in the next one. Looks like we have a significant delay in our broadcast and the comments, more than 10 seconds. So here's a comment from one of our regular viewers. Etivet is saying, thanks, my trading is much improved since I found you. That's exceptionally good to know, and thank you for sharing that comment with our live audience, Etivet. And very welcome to you, Luis. Goodbye, guys, and take care.